Namaskar dosto. In today's video, we shall be talking about some important clarifications by way of Circular 135 relating to refund of GST. The circular was issued on 31st March 2020. We will be talking about 5 issues which have been clarified by this Circular 135. Starting with the one important issue of bunching of refund claims falling into different financial years. Circular 37 was issued on 15th March 2018, and there was a problem that if a particular input tax credit is received, inward supplies received on a particular tax period, and the supply was made in the succeeding tax period, and the problem was that 2 or more tax periods, the facility was given to club 2 or more tax periods to file the refund jointly, bunching. But this bunching was restricted with respect to one fact, that these 2 tax periods cannot fall into different financial years. The same restriction is continued by way of Master Circular 125 issued on 18th November 2019. But there were some representations given by the merchant exporters also, who said that that we have input tax credit in one tax period and supplies in the succeeding tax period, and the next tax period falls into next financial year, then the refund is not possible. And there was one Delhi High Court judgment also in case of Pitambara Books Private Limited, wherein Delhi High Court said that this restriction is not possible. They have said one very important thing about the circular part. I am reading it from Circular 135 only. What Delhi High Court said in Pitambara Books Private Limited, they said circulars can supplant but not supplement the law. Circulars might mitigate rigors of law by granting administrative relief beyond relevant provisions of the statute. However, central government is not empowered to withdraw benefits or impose sticker conditions that postulated by the law. So this was a sticker condition which was not visualized by the law to club these 2 financial years. The department considered this issue on various representations and on this judgment also, and then they removed this restriction of clubbing 2 or more financial years in one refund application. And now Circular 125 para number 8 is being modified to this extent by way of this Circular 135 issued on 31st March 2020. So now 2 or more financial years tax periods also can be clubbed together for filing refund application. Next issue which has been clarified by this Circular 135 is with respect to accumulated ITC on account of difference in rate of tax, GST rate. It has been seen that refund was sought for inverted duty on account of inverted duty due to the purchase rate is less than the sale rate, meaning thereby the tax rate which was applicable on the inward supplies was less and the tax rate on outward supply was more at different points of time. Today a particular product is taxed at 18%, purchased at 18%, but after some time the rate of tax on that product is reduced to 12. So the taxpayers were claiming this as an inverted duty structure. So the department clarified section 54 subsection 3 clause 2, where credit is accumulated on account of rate of tax on inputs being higher than the rate of tax on output supplies. One point which is noteworthy here is the circular said that input and output being the same but attracting different tax rates at different times, different points of time, it does not get covered under section inverted duty, under section 54 subsection 3 clause 2 inverted duty structure. Therefore, where the input and output supplies are same and tax rates are different, it would not be falling into inverted duty and there would not be any refund. This was the second issue clarified in Circular 135. Now next issue is about the refund of amounts other than the zero rated supplies. There are 4 types of refunds which are other than the zero rated supplies. Refund of excess payment of tax, refund of tax paid on intrastate supplies which is subsequently held to be interstate supply and vice versa. Section 77, refund is to be claimed for that. Refund on account of assessment, provisional assessment, appeal, any other order, or refund on account of any other ground or reason. That was 4 different types of refunds other than the zero rated supply. Now, a very peculiar aspect in these refunds is that there is no separate debit to the electronic credit ledger for these refunds because tax is already paid by way of one or the other mean, earlier paid or tax paid. Now the taxes, what has been seen in these types of refunds, the taxes were paid either by way of debit in electronic credit ledger or by way of electronic cash ledger. But the refund which is being made on account of these reasons was paid, unintentionally was paid in cash. The tax was paid by way of debit in ITC, but refund is made in cash. Inadvertently, the electronic credit ledger is being converted to cash. So this issue was considered by the department, and then they said by way of this Circular 135 that in the same proportion in which tax is paid, the refund shall be issued. For example, 100 rupees tax is paid, 80 rupees is debited through electronic credit ledger, 20 rupees is from cash ledger. So the refund also shall be made out by way of recrediting 80 rupees in electronic credit ledger by way of issuing order in GST PMT 03, and 20 rupees shall be paid in cash. Recently, 20th April 2021, this new functionality has been added to PMT 03, which enabled the issuing authority to recredit the refund in the electronic credit ledger only by way of PMT 03, and the remaining portion that is paid for, that was paid in cash, would be paid in cash as a refund. So this was the third issue clarified in Circular 135. Circular 135 talks 4th issue about the refund of those invoices which are appearing in 2A or which are not appearing in 2A. Circular 125 para 36, which was issued on 18th November 2019, said that the refund shall be made for those invoices also which are not appearing in 2A. Only you have to upload the self-certified copy of invoices of those invoices along with the RFD 01 on the portal which are not appearing in 2A. But because of the application of Rule 36 sub Rule 4, it has been observed by the department suo moto that the refund shall be made only for those invoices for a particular tax period which are reflected in 2A. Even if you upload the copy of self-certified copy of invoices, but the refund shall not be made. So this was again suitably amending the para 36 of Circular 125. Fifth and the last change or this clarification which has been made out by Circular 135 is with respect to HSN SAC code. Circular 125 gave us a specific document called Annexure B, in which all the inward supply information was required to be uploaded along with the RFD 01. The field formation, the refund issuing authorities observed that Annexure B does not contain any HSN or SAC code, and because of this the refund issuing authority is not able to identify that which refund is for on account of goods and for services. This distinction was all the more necessary, as said by them, when the refund is restricted for capital goods or in some specific cases restricted for capital goods or input services, especially in case of inverted duty structure. So this was made necessary, and then by way of Circular 135, Annexure B is suitably amended one column is added to Annexure B wherein it is now required to give specific HSN and SCC also of various goods or services of inward supplies on which refund is claimed. So these were the 5 issues and which are given by Circular 135 issued on 31st March 2020. I hope it would be beneficial for you and you would like it. Please don't forget to subscribe our channel and press the bell icon and forward the video as much as possible because it can help many professionals for their professional endeavors. Thank you very much, friends.